Transferring wealth successfully starts with asking yourself questions that will give your family a better life now and for generations to come. In this podcast, financial experts John and Michael Parise from Copper Beech Financial Group guide you through eye-opening questions to help you discover the truth about your wealth. Now, on to the show.
Hello and welcome to The Truth About Wealth with John and Michael Parise of Copper Beech Financial Group, but we are missing one person, and it's not Michael.
Not me today. It's the big guy.
The big guy. Yeah. So you're flying solo today.
I am. Well, not solo, with me and you. We have a guest with us today. Ben Ludwig from City National Rochdale is with us today. Excited to talk to him. But Ben, thanks for being a part of podcast today. How you doing?
Absolutely. Happy to be here.
Yeah.
Appreciate you having me on.
No, it's a long time coming, I think, for us. So I'd like to just start. Maybe you can give a little bit of your background personally, and of course, a little bit of a background on CNR and what you guys do. So why don't you start from there?
Yeah, absolutely. So I've been in the financial services industry for around 25 years now. I can't believe it's that long. Time flies when you're having fun, I guess. But I've been with City National Rochdale for about 13 years. And I'll explain my current role in a second here as we go through the conversation. But I spent 12 years prior to that at both Bank of New York Mellon and also SEI Investments on the research and portfolio management side of both businesses, playing various senior roles. My role right now at City National Rochdale, and we'll get into this obviously, is building personalized investment strategies for high net worth individuals. So it's a great role. It's a role I hope to retire in going forward. I think it's a career role for me. And then aside from that, personally, live outside of the Philadelphia area, have 4 children, happily married. Even though this is my full-time job, I sometimes feel like coaching my kids is my full-time job, and this is my hobby. So yeah, pretty busy.
Yeah, no, I get it with the kids for sure. That's definitely a full-time job on top of the full-time job. So yeah, so love to hear a little bit about CNR and what you guys do, because I think we're going to get into a little bit more on building these personalized portfolios, which is a little bit of a different approach, perhaps, than some of our listeners may be accustomed to in either working with their financial advisor, their investment advisor. So I'd love to hear a little bit about who CNR is and maybe how you guys operate and work with your end clients and other advisors.
Absolutely. So City National Rochdale, we've been in business as a firm employing a similar, but obviously improved over the years process. And it's very unique. When I meet with clients before they become clients, I would say probably the last 100 plus clients that I've met with before they became clients of ours and our partner advisors hadn't heard of us. Now, we manage about 70 billion in assets. So we're not a small firm by any means, but the reason they haven't heard of us is we focus on one specific part of the market, which is high net worth families and individuals for the most part. And even further, our business model is unique in that all of our business comes through independent financial planners and advisors like you and your team at Copper Beech. So we are not marketing to end investors. And the reason's simple. It's the planning that you do, the roadmap that you build for your clients, considering their entire balance sheet. That's really important. And then we talk about, you'll see it all over our marketing materials. We talk about intelligently personalized portfolios, which means 100 different things to 100 different clients. And I'm sure we'll get into that. But it starts with the work that you and our other partner advisors do, the planning side of the equation. So I don't want to cheapen what we do, but the planning that you do and other advisors that we partner with, that's the roadmap. That allows us to build a portfolio that's obviously in line with our views of the markets, the economy, and our research, but it's also lockstep with what that client needs. Our minimum is $1 million at the household level. So we can't do this for everybody, but for any high net worth investor with $1 million plus of investable assets, whether they work with us or some other firm that personalizes portfolio, we believe that personalization brings a ton of value to the equation.
Yeah, I mean, us as well. And I love the story around your firm, but most importantly, I would say, because that's how we view, that's why I think there's such synergies between our firms in a lot of ways, because we view investments and investment management as really, it's very similarly. So within the context of a plan, that's really, I think, it's just so vitally important that I would say maybe gets missed a little bit in the equation, where when you're hiring an advisor as the end client, where there's a lot of focus on the investment side of the world, which of course is very important, but at the same time, to have that as a piece of the pie, so to speak, within the context of a holistic plan is really how we view it. And it was, again, I'm just so happy to hear you take a similar approach to that. So I'd love to hear a little bit about, Ben, if you can, on, I mean, personal, like how do you define a personalized investment plan? Because I think that's really what maybe differentiates you guys a little bit from maybe your competitors in the space. How would you maybe define that?
Yeah, I think there's layers to it, obviously, but at its simplest form, we don't manage products, mutual funds, or model portfolios. So there's nothing cookie cutter about what we do. And again, we start with partnering with you, understanding the plan, understanding the client's unique needs, whether it's legacy needs, tax needs, asset protection needs. They have business interests, real estate interests. Even though we're managing the investable assets, we want to really encompass all of that to make sure the portfolio is in line with what that client needs. So again, there's layers of it, but we want to use individual stocks and bonds wherever possible. And when I educate clients on that, the word I use probably more often than not is control. Right? We have a ton of clients that come to us and they started as investors 10, 15, 20 years ago. They started using mutual funds, exchange traded funds, all the products that are out there. And that served them really well as they were putting money away, saving money, and accumulating assets. But when they start talking to you or another advisor, they're typically accumulated a great deal of wealth. Their tax situation is changing. They're moving towards retirement. And that straight growth line is going to change at some point in time. So the point I always make to these clients is if we can build you a portfolio that's in line with your needs and your changing needs, and it stays fluid with you over time, and use individual securities to have a rhyme and reason behind everything in the portfolio, it gives you as the advisor, and it gives the client more transparency and control over making changes going forward, whether it's to manage risk, manage taxes, manage cash flow needs, whatever it is that changes in the client's life. We have a portfolio that's tailored to them, and we can make those changes with more surgical nature, if that makes sense. As opposed to, and we have a lot of times with clients that are in mutual funds, and I spent a lot of my career looking at mutual fund portfolios. The dialogue is typically this: it's, you have a great portfolio, there's some good products in there, they've served you well, but you have 15 different mutual funds and they own Apple in 10 of them. There's a lot of overlap, there's a lot of inefficiency, and that's not because there's something that's wrong, but that's what you get in the product world. If we can break down that structure, the best way I explain it to clients is Mr. and Mrs. Jones is the client. We're building Mr. and Mrs. Jones their own mutual fund where they own the individual securities and there's a rhyme and reason behind everything. So no matter what gets thrown our way, unforeseen cash flow needs, changes in the market, changes in the client's risk appetite, we can sit side by side with you, really understand how the plan is changing, and the portfolio can move with them more fluidly. And again, it's control is the right word, but it gives you more control of everything across the board, including tax management.
Yeah, I love that description. Almost like a private mutual fund in structures is kind of what you're building as a private portfolio. Because, and I love that mutual fund example that you talked about in terms of reviewing a portfolio, because we see that all the time as well, where the investor A has a large cap mutual fund and a small cap equity mutual fund, and they might have overlap. The style drift is one thing that we see a lot that happens within these mutual funds, where there's I would say maybe pressure to move into a certain asset class that maybe is slightly outside of maybe their core competency. Let's just put it that way. And you get that overlap, right? I imagine you see that all the time, but that is something that the end client or investor sometimes doesn't necessarily see, because they have to really look through the fund to the individual holdings, and that often doesn't get done. So you being able to kind of look through that is really, really important, because then you have overexposures in certain holdings or asset classes, sectors, whatever the case may be. So that's really very, very important from our perspective. But I'd love to hear a little bit, like when you meet a new investor through maybe another advisor, what's the process that you go through to design that custom portfolio for them? What is the information that you need? What types of questions that you ask?
Yep. So my role and my team's role at the firm is really the part of the portfolio strategy team that's in the architect phase of the process. So I start with you and with our other advisors right at the ground level. understand the financial plan that's either in place or being built with that client, because sometimes this happens simultaneous, but
Right.
we really want all the inputs from you and your team as you give us going forward to define what that portfolio looks like. And it's not a set it and forget it type process or cookie cutter, because as you know, you've seen our proposals as we go through the process. Most firms would show a client and they do an analysis of the portfolio and show the client, here's where you are today. Most firms would then propose a product and say in the proposal, here's where you are today, here's the product we propose, and show a side by side. With our process, we built in-house analytical tools that help clients go through this in a really good manner. But the first slice is I'm going to meet with you or other advisors with that client to educate them on here's where they are today. And in working with you and the other advisors, we might pick 3 allocations that may make sense. So just to be simplistic, if the client's currently at a 60-40 mix between stocks and bonds, we might show the client, based on your input, a 50% stock portfolio, a 60% stock portfolio, and a 70. We'll cast a very wide range at first to show them options. And because we cast a wide range and we do a good job in educating the client on the portfolio build, the possible volatility or risk, the return expectations, the cash flow, all the things that are important to them, they can see it very clearly. And what typically happens is you always give us feedback because you know your client best. But in that education process, the client, even if they're not astute at all from an investment standpoint, I think we present it in a way that we get feedback from them. Because the biggest part that the client needs to weigh in on after your plan is built, and you're obviously helping them, is they have to help us set the risk parameters on the portfolio. What is the right risk posture for that client? We already know their other needs, but we want to hear from them. So by presenting it in this way, really starting at the wide end of the funnel, meeting with the client, gaining feedback from you and the client, revising and refining going forward, we can get there. It's a lot better process than like most of our world uses, which is give a client a questionnaire, have them answer 5 to 10 questions, and it spits out if they're conservative, moderate, aggressive, or a few stops in between. And then what happens? They get the model that matches their profile. We want to take it a few steps further. So it's not a perfect science, but we take multiple steps with both our advisors like yourself and with the clients just to make sure we're at the right starting point.
So how, from a service model perspective, ongoing, how does CNR review those sorts of upfront analytics, I'll call it, in terms of building that portfolio? Is it once a year? Is it quarterly? Like how do you typically work to make sure that you're servicing that account appropriately?
Yep. So I'll hit that from 2 different angles. One is our internal angle of monitoring portfolios, adjusting portfolios as needed. There's nothing robotic about what we do. A lot of mutual funds, a lot of those model type approaches out there will rebalance the portfolio on a quarterly, semi-annual, annual basis. We're doing it as needed. So on a daily basis, we're watching the drift of the portfolio. We're looking at the underlying holdings. Our research team is sharing knowledge with, and I didn't mention this yet, but as you know, every client that works with us at $1 million plus gets a dedicated portfolio manager and team that they will work with throughout the life of that portfolio. So that team is working behind the scenes daily and making adjustments as needed. So there's nothing robotic. There's nothing quarterly, semi-annual, annually. As you know, sometimes, the saying is it's better to let your winners run in some cases, as opposed to just automatically rebalancing the portfolio, because you want that systematic process. Again, many reasons, but that's another reason why our minimum's $1 million, because you can't do that for every single investor, but at $1 million plus, it makes a big impact. Then on the service side, we really become a part of your team, as you know, if we work with a client. So our portfolio management team is available to clients to do regular meetings. Sometimes advisors like yourselves want the portfolio management team there in every meeting. Sometimes they're there once or twice a year. It really matters on the client relationship and how much time they want to dedicate to it. But frankly, the most important conversations are the ones where something changes in the market that's drastic, and really the risk appetite of the client kind of is in flux at that point in time, where they're calling you up, or something changes in the plan where the client is going into early retirement. They have an unforeseen cash flow need, whatever that is that changes from a goals and objectives standpoint. When we're working together, you're obviously taking that call as the client's primary contact and financial planner. But when we're working with you, we're a part of that conversation, making sure the portfolio moves along with the client as things change on their side of the table. So it's really up to the advisor that we're partnering with, yourself here, and the clients, as to how often we talk, how deep we go. Oftentimes, while clients are still working, it's a little bit more infrequent. But when clients get into that retirement phase, they typically want to get educated more on how their wealth is working for them. So we'll have real detailed conversations with our clients.
Yeah, as two follow-up questions that I have with what you just said, and I'm interested, and I'm sure it's going to the benefit of having these custom portfolios. But how that transition that you just mentioned from maybe the earning years to a retirement years, just from a philosophical perspective, what are you seeing out there with some of the investors that you're working with in terms of changing their maybe their risk tolerance or their allocation as they approach that age? Because longevity is an issue from a lifespan standpoint, and their traditional wisdom was always, as you get older, you should be becoming more conservative, quote unquote, in your allocation, maybe moving away from equities into more fixed income type of investments. We're having conversations with our clients about maybe staying more invested into equities for a little bit longer. Do you see that on your side, and how do you maybe have those conversations with a client that's maybe going through that?
Yeah, we see it. And honestly, the beauty of my job is every client is unique and we can solution something unique for every client. So there are those clients that have built a nest egg, they're retiring, they live on a pretty steady budget, and all they need is cash flow going forward. They want their paycheck through retirement. There are other clients where they might have more than enough to live on, and legacy, their children and their grandchildren become. So it really matters on where that client is. But what we're trying to do is really solidify, and clients, when they come to us and they come to you for planning, when you go through the process, what you realize is most clients don't only have one goal. They have a hierarchy of goals. So it's also trying to list those hierarchy of goals and how do they rank? What's the most important to least important? So we're really working with you and other advisors to list those goals, rank those goals, and figure out what the amount of assets in the nest egg that client has. How do we best get to the finish line, whatever that is? And with some clients, the finish line is 2 or 3 generations down the road.
Right.
So every client's a little bit different. The devil's in the details, as with a lot of things. But the nice thing about our job is every single client is trying to get to a different place, and we can solution a portfolio and a strategy that gets them there, as opposed to pulling products off the shelf and trying to put a client into a product that's not a perfect fit.
Yeah, no, that's awesome. Great answer to that. All right, I want to shift into one of the favorite topics here on the podcast, and that's taxes and how we manage taxes. And so I'm interested to hear your take and CNR's take on ongoing tax management and how you guys address that, because that's something that is a constant conversation that we have with our clients in terms of they're all, usually very successful, high net worth individuals earning a high income as well. So tax management of that needs to be top priority. So love to get your thoughts on how you guys approach that when you're working with the end investor.
Yeah, now it's a topic that comes up in every client meeting. It's a topic that resonates with every client because obviously tax savings go into your total return and go into your pocket at the end of the day. So a few little stories there. One is whenever I present to clients over the last year or so, I started really talking about the saying is control what we can control. And the reason I started talking about that is I have 4 kids. They're all teenagers. They complain about everything like most kids do. And I think that's my favorite saying with them. But I also coach a lot of baseball with my sons and in teams. And again, kids, we use that saying nonstop. So I take that into my client presentations. And the reality is there aren't many free lunches in investments. We can't control what the markets do. We can try to position clients accordingly and get them into a good spot. But if you're willing to go down to that level of detail on every trade every day, take advantage of market volatility in every trading day, and do everything you can to control taxes in the portfolio, I think it's as close to a free lunch as we have. Again, another reason why our minimum's $1 million. You can't do that for everyone. It's not a perfectly scalable process. But at $1 million plus, if we can save a client 0.5%, 1%, whatever that number is in any given year in taxes, when you turn that into dollars on $1 million plus portfolio, it creates a massive amount of wealth compounding over time for our clients. So we do that in a few different ways. One is every single day in the portfolio, if we're recommending a trade, and we have a research team like a lot of other big firms where we have analysts that look at their own sectors and industries, and that's their job. So they're sitting there and coming up with the best ideas from a portfolio standpoint, whether it's stocks or bonds or whatever asset class they sit in. But when they recommend a trade, and I always use a simple example like Coke versus Pepsi. If our consumer analyst woke up this morning and said, we want to sell Coke and buy Pepsi, Here's the fundamental research. If it gets approved at the research committee, at most firms or in mutual funds, what happens? They hit a button and they sell Coke and buy Pepsi.
Yep.
Whatever the impact is, it flows down to those model investors or the mutual fund shareholders. With us, we're taking in an additional step, which is your portfolio manager that you work with and your client works with. They're really the filter on the research. So they are then taking that to each client portfolio and saying, all right, if we were to hit the button and sell Coke and buy Pepsi, what does it do to the client's overall risk? What does it do to their cash flow? What does it do to all the things that are important to them? But the big one is taxes. Given the client's effective tax rate, we can look at every trade every day and make sure it makes sense after the tax bill to the client. Because in that simple example, there's always going to be a client where we held Coke for a few years. They have good unrealized gains in Coke because the name's gone up. And when we look at the trade, the research analyst did a fine job. But if we hit the button on that trade, the tax bill that specific client would pay might completely wipe out the upside we are trying to gain from a research perspective. So just being smart on a client by client basis, we believe adds a lot. Also, we have volatile markets right now, and I'm sure that's going to continue going forward. The advantage that gives you, if you're willing to go down to that degree to take advantage of it, is as we get volatility, we can harvest losses potentially in a portfolio to offset gains or future gains. And as you know, in our industry, a lot of the big firms either don't do that, or people wake up in December and say, oh boy, we have a ton of gains. Let's find some losses to offset these gains. But you just missed 11 months of trading opportunity to maximize that. So those are two ways in the ongoing. And then also the final way is if we're transitioning a portfolio, because a lot of clients, when they come to us, it's because of change in life, change in plans. They're not on that straight accumulation growth path anymore, but they have some really good growth in their portfolio and large gains. So those clients typically struggle with making a change because they don't want to rip the Band-Aid off and pay a huge tax bill. We will build a custom tax transition with every client to come over. So what we typically do is move the portfolio over in kind, make no changes. And then myself and my team work with you and that client to really strike the right balance between taxes and portfolio improvements. And when we start with a client and ask them how much in taxes do they want to pay, where do they usually start? You start at zero, and then you have to educate that client. And typically we'll do it if there's a large gain, we'll do it over multiple years. So we never force the client's hand. We, with you, educate the client to get to the right place. They'll dictate how much in taxes or gains we can take in any given year. Oftentimes we're working with their CPA as well. So it's coordinated and there are no surprises in the process.
Yeah, I mean, that transition piece of it and moving and changing strategies, I think, is so important. And it's one of the challenges that you alluded to, ripping the Band-Aid off. A lot of families that we work with, when they maybe reach those life changes, or they have a different objective in terms of how they want their portfolios managed, with the markets, on this 15 some odd year bull market, there's always, if it's a taxable portfolio, there's very usually some gains that are in that portfolio. And it does make it a challenge to move into a new strategy, particularly if they maybe didn't have the customized portfolio that a CNR will build, where you have individual holdings that you can maybe do a little bit of management around that. A lot of times we'll see a portfolio that maybe is invested into ETFs, where they have the S&P 500 ETF, where that's the holding. You can't really, there's not a lot of tax management that you can do around that if you wanted to shift into maybe a portfolio that you guys would design. So it is a challenge. It's and sometimes, to your point, there's only so much we can do. Everybody wants to pay no taxes, but oftentimes, you don't want to let the tax tail wag the dog. You want to make sure that you have a good management strategy in place going forward. So anyway, it's I commiserate with you guys on that. That's probably a heavy lift, I would imagine.
Yeah, and I think I used the word surgical before. If we're using individual securities, have a rhyme and reason, understand the plan, understand the client's tax situation, whether it's the market changes or the client's changes, we can be very surgical in making adjustments in the portfolio and being cognizant of taxes and other changes. If you have that mutual fund or ETF portfolio, the analogy I use or the explanation I use is it's almost like you don't have that level of control. So you almost have to take a machete across the top of the portfolio and sell things arbitrarily, which is not perfect. Right. So for a high net worth investor with $1 million plus, just because of that individualized nature, we think it makes improvements across the board. Yeah, no, that's we're right in lockstep with you on that. So listen, I know we're running a little bit out of time here. I want to thank you again for hopping on. This has been really helpful for our listeners, and it's been great. Love to have you on again. But before we sign off, is there anything that maybe we didn't cover that
you think is important for our listeners to hear about?
I'm sure there's a lot more, but I think we covered a lot of good ground today. The one thing I would say is, and you guys do a great job, is I have, just because I've been in the industry for a while, I have investors that come to me directly and they're like, I have an inheritance. I have $1.5 million. I have $2 million. My tax situation is changing. I want to adjust risk. The first thing I say to them, and I don't want to, again, cheapen what we do, but the first thing I say is I connect them to one of our financial advisor partners. And I say, have you had a financial plan? And oftentimes it's no. So the planning process is the starting point. And I think once they get into it, a lot of people realize, all right, the plan's important. My investment vehicle is my investment portfolio is the vehicle to get me to my goals. But if we could bring those two things together in a really coordinated fashion, there's a lot of additional power there. So I think that's what we do in combination with you and other advisors. So hopefully that came through today.
Yeah, no, this is great. And I want to thank you again, Ben, for being a part of this, and looking forward to have you on again soon.
Absolutely. It's been fun. Appreciate it.
Thanks.
All right. Take care.
Michael, how do we go about getting in touch with you if somebody has questions?
Sure. You could reach us on LinkedIn, myself, my father, John, Copper Beach Financial Group. We have our own LinkedIn page. Our website address is www.cbfgllc.com, or you can call us on the phone, 856-988-8300.
All right. Thank you both. And thank you for listening today. Please like, follow, and share this podcast with your friends. Until next time, I'm Wendy McConnell.
Thank you for listening to the Truth About Wealth podcast. Click the subscribe button below to be notified when new episodes become available.
This material is for informational purposes only. Neither Osaic Wealth, Inc. nor its representatives provide tax, legal, or accounting advice. Please consult your own tax, legal, or accounting professional before making any decisions. Copper Beach is not affiliated with Osaic Wealth Incorporated. Securities and investment advisory services offered through Osaic Wealth Incorporated, member FINRA SIPC. Additional advisory services offered through Copper Beach Financial Group. Osaic Wealth is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth. These opinions are subject to change at any time without notice. Any comments or postings are provided for informational purposes only and do not constitute an offer or a recommendation to buy or sell securities or other financial instruments. Readers should conduct their own review and exercise judgment prior to investing. Investments are not guaranteed, involve risk, and may result in a loss of principal. Past performance does not guarantee future results. Investments are not suitable for all types of investors. Any opinion expressed in this forum is not the opinions of Osaic Wealth Incorporated and have not been reviewed by the firm for completeness or accuracy. Osaic Wealth Incorporated and Copper Beach Financial Group are not affiliated with any other named business entities mentioned.